May profits be upon you. Welcome to another weekly Forex forecast. We're going to be looking at the equity markets, the S&P, the NASDAQ, and the Dow Jones. We're looking at it through the lens of the futures markets. All right, that would be ES and Q and YM. But understand that you could use this analysis to apply to your CFD or FX brokers, right? So let's take a look at the S&P. One, you can see it's bullish, right? What I want you to notice is breaks of structure. This was a break of structure, the all-time high back in January 2022, right? And once we broke that high here, all right, you understand that the market is bullish. And what you look for is retracements because historically, the Dow has been nothing but bullish. You just wait for a pullback to end and you resume your buys. That's the strategy. That's the overall big strategy there. Uh, just wait for buys, man. All right. You can take sells, especially if you're a day trader. You're going to take buys, sells, whatever. But the safest way to do it is to keep putting in your buys, buy the dips, and you'll be fine. All right. But let's get back to trading. All right. So uh, we have this retracement, and then you have the impulse. This is an impulse. This is a retracement. This is an impulse. This is a retracement. We pushed up, didn't quite make it, had a swing fail here, had 1 week of this is the weekly time frame of, sorry, I should have said that from the beginning. So each candle is 1 week. And we had a bad week the beginning of September this year, but we pushed through. Why did we push through? Because price hit a bullish fair value gap right here. All right. The bullish fair value gap was respected ultimately. It went down, it went pretty deep into it, but it was respected ultimately and supported higher prices. This is the principle of fair value gap and how they work. All right. Price comes back to them because it's an imbalance. This is an inefficient price move. Nothing but buyers. They want to offer fair value. So price comes back into this imbalanced area and rebalances it for buyers and sellers. All right. And ultimately it is used to support higher prices when price comes back to revisit. Okay. Now, you see these doji candles here, but they closed bullishly after we took the well, now the old former all-time high, but we swept the all-time high, swept it again, and then we finally get a close above it here by the end of September, and starting in October, we have price trading through the previous highs of September, trading through it. That means it didn't just sweep; we displaced through those highs, which indicates uh, uh, more bullish gains to be made. All right. And that's what followed. Last week closed very bullishly, displaced above the previous candle, or the previous weekly high, and left a fair value gap right here. Can you see it? All right. Left a fair value gap right there. So I didn't mean to do that. Come on, man. Oh, man. Let's see if we can get that back. All right. I'm sorry. Didn't mean to get lost. I didn't mean to get lost in this mess. Doggone it. All right. So we got the bullish fair value gap here, and you see how our price pushed up last week, and we closed pretty strong to the top. Now, if we go to the daily, uh, you can see price did come back down, did retrace. All right, like train tracks, went up and then came down almost equally, right? But why did it push higher after it retraced? Because there was a fair value gap right here. All right, that's a daily fair value gap nested within this weekly fair value gap. This just gives it extra strength. It makes it extra sturdy, makes it more dependable that it will hold price and price will respect it. And it did show respect by continuing up higher. Now, Friday closed with an inside bar inside of the previous daily, the previous trading range, the previous day's trading range. All right, this is an inside bar. And but what I want you to notice is that the low was protected from the previous day on Thursday. The low was protected. It did not get swept. And we closed bullishly, showing the momentum. We closed right at the halfway point of this wick, the wick range. The wicks have their own range. It's up and down inside there. The wick has their own range. When we see closes or right around the 50% or better, we're inclined to think that the next candles will follow suit, and we will take that um, buy side liquidity at the top of that candle with Mondays, Tuesdays, Wednesdays. Uh, we should be able to hit this high, okay? But what you want to watch is how the candle is formed. Are we going to displace past that high? Are we going to displace past this high, this uh, draw on liquidity? That will be the question. All right. I want to see a displacement like we saw here, displacing through that high. And then I want to see how the next candle forms. Will we form a bullish fair value gap with this high intersecting that bullish fair value gap? Like this high is intersecting this weekly fair value gap. All right. It just shows when you have these kind of points overlapping each other, it strengthens the argument for price to um, be supported for higher prices. You understand? It strengthens the argument because it acts as a confluence when we layer, uh, um, you know, what do you call it? Discount arrays, premium arrays. When they are layered, when there's more than one at the same point, we have some confluences, and we can depend on price to either go higher or lower. All right. So in this argument, I'm looking for this as my immediate, what do you call it? My draw on liquidity. But I also want to show you this. What is this? Why is that got dollar signs on it? Because I believe we're going to hit that mark right around 6,000. Right around 6,000. What makes me think that? Because it's a measured move, symmetry. All right. I'm looking at a symmetrical move. All right. And I'm measuring that move from the swing low to the swing high. All right. And then the next swing low. I'm going to move this all the way over so we can see the prices here. And this is 80% of the move. All right. What I want to see is this. Oh, man. I don't believe I just did that. This move from swing high to from swing low to swing high, that move to here, from this swing low to the next swing high. Now, this is 100% of the move here. All right, this is 100% of the move here. I'm looking for 80% of that move. That's what I'm looking for to hit first. If we, depending on the price action, we could get to the 100, but I want that. I want the lower hanging fruit here. This is 80% of the move, but why is my mark here? Because there's a whole number here, right around 6,000. All right, I like that. If you've been looking at my videos, I like those whole numbers. If we do the same move, if we do the same marking on the weekly, we would look here, to the swing high, then to the swing low, and I'm gonna move this out so we can see the numbers, and you'll see that 100% of the move is right there, right at that. what is now the right around the 80% on the daily. I hope I didn't confuse you. All right. But so I'm looking at that move on the weekly. I'm looking at the daily measurement of that move, where I'm just measuring the impulse. All right, not the retracement, but the impulse is what I'm measuring from the swing lows. All right, and I'm looking to project into an area that we have no data for. These are all-time highs. There's no data to move with, to show levels of key levels or anything. So, we're projecting, and I'm looking at that as my target. Okay, I'm going to move on to the NASDAQ. On the NASDAQ, uh, if we go to the weekly, and I get rid of all of this extra stuff. All right, what do we see? Same thing, same basic things of the S&P. All right, we have the high, we break the high, we have a pullback, we have a new impulse. I love this move. All right, and the Nasdaq is lagging behind the S&P and the Dow. It's a little weaker. All right, but it's still moving bullishly. All right, and what do I have? I have this as the all-time high here. All right, we have not come near it. Unlike the Dow and the S&P, we haven't come near it yet, but we are respecting right now a bearish fair value gap. All right, this is on a weekly time frame. All right, and price tapped here, reacted, and now we have a bullish candle pushing back into it. The highs are the lows are becoming higher, and Friday's candle closes a doji, yes, but that low is still higher than the previous one, and the high is still higher than the previous high. All right, so oops, do that. All right, quicker than that. All right, so I am looking at the respect being shown this bearish fair value gap, but I do believe that the next candles should take out this high. I believe that we are lagging behind the S&P, but we will move higher. And if I were to do my projections on the daily, let's go to the daily. If I would do my projections, 1, 2, I'm looking for price to give me an idea of where it could go. All right. This is the low. So I'm moving this out so we can see the numbers. This is 80%. And that high is right below that 80%. I believe this high is within reach. Here's my immediate target here at, oops, I didn't mean to do that. Come on, man. All right. My button is not working properly, but I'm just going to line this up the best way I can. All right. I got to get that fixed. So this is my immediate target here at 20,686, and the ultimate goal will be to get this high. I believe that's well within range. It's 80% of the move, and this is 100%. I'm not looking for this. I'm looking for 80% because this is again a lagger, and I'm going to put this mark here, just like I did on the other one. I don't know why. There you go. I'm going to put that there as a draw on liquidity to get prices up higher. But this is the immediate target. All right. We have that high to get to as well. But, and I'm going to, matter of fact, I'm going to put that one on here. Can I get you? All right. And I'm going to make this one a dotted line. I'm looking for these after this high. All right. This is previous weekly high. And that would be the first target. Then I'll move on to the second target, and then ultimately the third. Got it? All right. If we go to the Dow is moving pretty strong. It might be the strongest one. Last week, it was definitely the strongest one out of all three. All right. You can see it's just been since when was this? April? it's been kind of consolidating, ranging, right? And then we finally get a break and close above this high over here, all right? And price immediately pulls back. But when it pulls back, when it retraces back into the range, you want to see if it's taking out the swing low, the last swing low made. All right, it didn't get past that low. All right, it came close to it, but it didn't get past that low, and then it bounced hard. Okay, great. All right, so uh, we have this trajectory, and uh, price pulls back, and we've been bullish since. And what is price doing now? Dancing on a weekly basis, on a weekly time frame. We can see that it's been dancing here, 1, 2, 3, and then pushes higher on this weekly fair value gap. All right. If we go to the daily, you can see how long price was here. We talked about it in my previous videos, how price was dancing on this for a good while, and then we finally got the breakout here. All right, you look at my previous videos on the Dow, and you will see that yourself. And price pushed higher, traded through, displaced through that high, indicating that there is a desire for price to go higher. All right, we have the retracement into the bullish fair value gap on this daily time frame, and you see price pushing higher, making new highs. Now, price took out that previous high here. All right, swept that high, traded through it. Not the strongest close in the world. I like that a stronger close to be more demonstrative, but it did close behind that. It did close higher. Price opened, pulled back, kept that low, protected, and pushed higher, taking out the Thursday high. All right, making all time high on Friday. All right, and we took out that our goal. Now, what is our new goal? Of course, the new goal would have to be the previous weekly high. Again with this, what is going on with this thing? There you go. All right, so we have this new high to take out. Hello, hello, where are you? Okay. All right, we have that new high to take out. And you can see I have a mark up here, all right, for the measured move, because we're in all-time highs. There's no data up here. So I have to project what that data would be. All right. And what would I do? What would I measure? I would measure from here, this low. Okay. My computer is, there you go. I'm sorry. I had about the blinking computer. All right. From swing low, swing high, swing low, back to swing low. All right. And we're going to move this out so we can see the numbers. And you can see at 80%, I have that line mark. That's all that is. And I'm looking for price to hit directly to it. Okay. I'm looking for how price displaces. I'm looking for fair value gaps to form to support higher pricing, but that is the projection right now. And we don't have any fair value gaps forming just yet. We don't have any bearish ones either. So there's nothing here to say we should be looking at selling. All right. All I have is blue skies. All right. And I'm looking for buys only at this point. If price breaks below these lows, then I'll start thinking about how it displaces. It comes back into this range. Then I'll start thinking about bearish scenarios. Okay. That's it for these equities, for the forecast for this week upcoming. I hope you enjoyed the video. Make sure you hit the like, make sure you hit a boost, and make sure you leave a comment or a question. If you have a market that you would like me to include in the equities analysis, just let me know, okay? And I will leave some links on your screen or in the chat. Make sure you check the comments. Make sure you check the comments, because I always put updates to these videos, to these forecasts in the comment section. All right. I'll see you in the next video. Thank you for watching.